Hello class, welcome to this video lecture. So now we have come to the culmination of the audit process, which is the forming an opinion on the financial statements and issuance of the auditor's report. So in this video lecture, we will cover the following items. So first, we have forming an opinion on the financial statements. So based on the evaluation of the audit evidence that we have obtained during the performance of our audit procedures. We will also cover the basic sections of the audit report to be followed by an actual audit report. So in this part, illustrative audit report that we have obtained from a real company or actual company. And then we also discuss the modifications in auditor's report. So like the additional paragraphs to the audit report. So this one pertains to the emphasis of matter paragraph and other matter paragraph. Then we will discuss the modified opinions. So like the qualified opinion, the adverse opinion, and a disclaimer of opinion. And then finally, we will discuss other issues affecting the auditor's report. And there's quite a lot of items under this one, like the considerations on going concern, comparative information, initial audit engagements, work of an expert, so subsequent events, and the dual dating of a report, and finally, other information contained in documents that also contain the financial statements. So we'll go to the first part. So the first part is forming an opinion on the financial statement. So for this part, our references include PSA 330. So auditor's procedures in response to assess risk. We have PSA 450, evaluating misstatements, and PSA 700, forming an opinion and reporting on the financial statements on or after December 15, 2016. So this one is quite recently modified or changed or updated. So as far as our standard is concerned. So we go to the objectives. Our objective in this part of the audit. So this is the final or last phase of our audit procedures or process. So here in this part of the audit, our objective is to form an opinion on the financial statements, so as mentioned earlier, based on the evaluation of the conclusions drawn from the audit evidence that we have obtained, and to express clearly that opinion through highlight a written report, so that also describes the basis of our opinion. Now, in concluding or in drawing conclusions from our audit evidence obtained, so we have to consider the conformance of the client's financial statements based on the applicable reporting framework. So, however, we have different types of reporting framework. So, therefore, our conclusion may also be affected by the type of framework that our client follows. So, for example, if our client uses fair presentation framework, so our consideration will be based on what a fair presentation is. So compared if our client, for example, is using a compliance framework, so which means that it's enough that our client comply with the requirements of that framework. So under fair presentation framework, our conclusion should be based whether the client's financial statements first, so complied with the framework, so complied with the requirements of that framework, and in addition, so we have also to consider whether disclosures beyond required by the framework are performed or done by our client. And it's also possible that our client will have departures from certain requirements of the framework to achieve fair presentation. So if necessary, to achieve fair presentation. So unlike for compliance framework, so our conclusion would be based whether or not the client has complied with the relevant framework only. Okay, so in case of audit of financial statements, so usually in the Philippines, what our client is following is the fair presentation framework. So that is why we not only determine whether our client is compliant with the requirements of the standards. For example, an example of applicable financial reporting framework is the PFRS, but we also consider whether our client made disclosures beyond what is required by the framework, or the client has departed from some of the requirements of the framework in order to achieve fair presentation. In forming an opinion on the financial statements, we have to conclude whether we have obtained reasonable assurance whether the financial statements as a whole are free from material misstatements, whether due to fraud or error. And in drawing these conclusions, we have to take note of the following considerations. So first, our conclusion in accordance with PSA 330. So whether we have obtained sufficient and appropriate audit evidence from our audit procedures. Next, our conclusion in accordance with PSA 450, whether the uncorrected misstatements are material, individually or in aggregate. So meaning to say, after we have proposed our adjustments and after our client, for example, affected certain adjustments that we have proposed and not affecting some of the adjustments that we have proposed. So whether those uncorrected misstatements are immaterial already or still material individually or in aggregate. So, and the evaluations mandated by PSA 700. So, what are these evaluations mandated by PSA 700? So, one, that the financial statements adequately disclose the significant accounting policies selected and applied by our client. So, we have to take note the significant accounting policies applied by our client in their financial statements. So, number two, so whether the accounting policies selected and applied by our client are consistent with the standards with the applicable financial reporting framework. So, number three, so whether the accounting estimates made by management are reasonable under the circumstances. So, number four, whether the information in the financial statements are relevant, reliable, comparable, and understandable. So, number five, whether the financial statements provide adequate disclosure to enable the users to understand the effect of material transactions and events on the information conveyed in the financial statements. So, number six, whether the terminology used in the financial statements, including the title of the financial statements, is appropriate. Number seven, we have to consider also the overall presentation, structure, and content of the financial statements. And finally, last, number eight, so whether the financial statements, including the notes to financial statements, represent the underlying transactions and events to achieve fair presentation. Finally, once we have concluded that the financial statements of our clients are fairly presented in all material respects in accordance with the applicable financial reporting framework, we provide what we call an unmodified or unqualified opinion. So this unmodified or unqualified opinion is equivalent to clean opinion. And this is the most basic type of audit opinion that we provide to our clients once we are satisfied that their financial statements are free from material misstatements. However, we will be talking about modifications in the audit report in the latter section of our discussion. So, but first, let us discuss the basic sections of an independent auditor's report. So, for this part, we will use the following references: PSA 700, forming an opinion and reporting on the financial statements. So effective on or after December 15, 2016. So because there was a recent updates on the standards last 2016. And also PSA 701, so communicating key audit matters in the independent auditor's report. This one is also relatively new, became effective also last 2016. So let's discuss the basic sections. The first section of the audit report is the title. So the title of our audit report is standard. So it should be the independent auditor's report. So by using the modifier independent in our audit report, it means that as auditors, we are able to meet all the relevant ethical requirements regarding independence. And also this title distinguishes our report from other documents that may come together with our report. So usually companies publish the financial statements, the audited financial statements together with annual report, which contains reports prepared by management. So therefore, to distinguish our audit report from the other documents that may come together with our audit report, it should be aptly titled or appropriately titled as independent auditor's report. So the next section of the auditor's report is the addressee, and we should address our audit report as required by the circumstances of the engagement. So usually our auditor's report is addressed no, for whom the report is prepared. So in practice, that would be addressed to the board of directors of the company. So because they are the ones who are charged with governance, or the board of directors and the shareholders of the entity or company. So sometimes the officer could be included, for example, the president and the board of directors, but it should not be addressed only to the officer, no? Like for example, the president. So because that could insinuate that the user of the report is only the management. And remember in our assurance, so we have this concept of three-party relationship. So we have to include the board of directors and in certain circumstances, the shareholders. So that is why here are the common addresses of our audit report. If our client is an incorporated entity, corporation, so we usually address it to the board of directors and or the shareholders. So we may include the officer like what we mentioned earlier, so but it should not be addressed to the officer alone. So for partnership client, we usually address it to the partner and the firm or the firm only. Okay, so to the partnership, address to the partnership. So for joint venturer, we address it to the venturers or to the participants of the joint venture. For proprietorship, we address it to the proprietor. And for outside party, we address it to the relevant engaging party, like for example, a government agency. So the next section of the auditor's report is the auditor's opinion. So the first section of the body of the auditor's report, so after the title, after the addressee, would immediately be the auditor's opinion, so that the users will already know, so what was the opinion of the auditor with respect to the audit of financial statements. And these opinion paragraphs will include the following. So it will identify the entity, the name of the entity whose financial statements have been audited. We also state that the financial statements have been audited. So except, of course, if we weren't able to audit the financial statements of our client. So like in case of a disclaimer of opinion. We also identify the title of each statement comprising the financial statements. We also refer to the notes, including to the summary of the significant accounting policies, and we specify the date or the period covered by each statement comprising our client's financial statements. So this is an example of the auditor's report portion. So in a standard auditor's report. So the first part is the opinion. So for example, we have audited the financial statements of ABC Company, the company, so which comprise the statement of financial position as of December 31, 20X1, and the statement of comprehensive income, statement of changes in equity, and statement of cash flows for the year then ended, and notes to financial statements, including a summary of significant accounting policies. And then we state our opinion. The accompanying financial statements present fairly in all material respects the financial position of the company as of December 31, 20X1, and of its financial performance and its cash flows for the year then ended in accordance with the Philippine Financial Reporting Standards or PFRS. So this is an example of unmodified opinion. Now, after the auditor's opinion paragraphs, so we follow it through with the basis for opinion. So the basis for opinion shall be directly below the opinion section, and we state here that the audit was conducted in accordance with PSA. So remember, our auditing standard PSA is mentioned so in the basis for opinion paragraph. So we also refer to the section of the auditor's report that describe our responsibilities under the PSAs. So include a statement that we are independent of the entity and state that we have obtained sufficient and appropriate evidence. So this is an example of the basis for opinion paragraph. So we conducted our audit in accordance with PSAs, remember? So our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statement section of our report. So this is a separate section in the audit report. So we are independent of the company in accordance with the International Ethics Standards Board for Accountants Code of Ethics for Professional Accountants, together with the ethical requirements that are relevant to our audit of the financial statements in the jurisdiction, for example, here in the Philippines, and we have fulfilled our ethical responsibilities in accordance with this requirement and the IESBA code. So we believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. So we mentioned earlier that we have to mention that we have obtained sufficient and appropriate audit evidence. The next section of the auditor's report, wherever applicable, is the going concern section. So we report it in accordance, or we report about it in accordance with PSA 570 going concern. Now, the basic concept is that we have to obtain sufficient and appropriate evidence, and we should also conclude on the appropriateness of the management use of going concern assumption in preparing their financial statements. So because this is a very pervasive assumption when it comes to the preparation of the financial statements. So if the client has a going concern problem, so we have to address that in our auditor's report. We shall discuss this further later in the latter part of our video lecture related to other issues considering the auditor's report to determine now when are the instances where we put going concern section in our audit report. So we proceed to the next one first for now. Number 6, the key audit matters. So the key audit matters, this is relatively new. So when it comes to audit reporting, so only effective beginning 2016, December 2016. So in the US, this is called the critical audit matters. But like going concern, it's also warranted by circumstances. So we only report key audit matters, required to report key audit matters rather, so for listed entities. So remember listed entities, so these are companies whose securities, equity or debt are sold in a public exchange or market. So we have to communicate key audit matters or critical audit matters in our report in accordance with PSA 701. This is our reference standard. Now, the information that we put in the key audit matters section of the auditor's report came from the matters that we have communicated with those charged with governance of the entity and evaluated by us auditor, who determined that these matters required significant audit attention during the course of our audit. So usually, what are the matters that we report in CAM or key audit matter section of our audit report? So these are number 1. So areas that are susceptible to higher risk of material misstatements. For example, the significant risks. So we discussed significant risk during our discussion on risk assessment, and those significant risks could also be part of our key audit matter. So we also can include in under key audit matter the significant audit judgment that we made, so related or involving significant management judgment. So for example, impairment loss now recognized by the client with respect to their asset or cash generating unit or goodwill. So because those impairment calculation involve significant judgment, so we can also highlight that in our key audit matters area. And finally, the effect on audit of significant events or transactions that have taken place during the period. So perfect example is the pandemic. So the effect, for example, of COVID-19 pandemic with respect to the operations of the entity. So we can also include that in our key audit matters section. So this is the template provided by the standard. So key audit matters. So key audit matters are those matters that in our professional judgment were of the most significance in our audit of the financial statements of the current period. So these matters were addressed in the context of our audit of the financial statements as a whole and informing opinion thereon, and we do not provide separate opinion on these matters. Then we enumerate the description of each key audit matter in accordance with PSA 701. So later on, we will have an illustrative audit report. So that is why we will be able to see actual examples of key audit matters in practice. So next part of the audit report, we have the responsibilities of management and those charged with governance for the financial statements. So in this section, we state the responsibilities of management and those charged with governance. So regarding the preparation of the financial statements, including the applicable financial reporting framework. So we also mention their responsibilities about internal controls and that they are responsible to prepare financial statements that are free from material misstatements, whether due to fraud or error. So we also mentioned that the management is responsible for the assessment of going concern, whether it is appropriate for the preparation of their financial statements, and those in charge with governance who have responsibility for oversight of the financial reporting process. This is an example of the responsibilities of management and those charged with governance for the financial statements section of the audit report. So the things that we have mentioned in the previous slide, so we also include that in our audit report. So after the responsibilities of management section, we have the responsibilities of the auditors for the audit of the financial statements. So in this part of the audit report, we state our objectives as auditor, that is to obtain reasonable assurance whether the financial statements are as a whole are free from material misstatement. So whether due to fraud or error, and to issue an audit report that includes our audit opinion. So we also state the concept of reasonable assurance, misstatements, and materiality. So we discuss it in this section of the audit report. And we also state that the audit in accordance with PSA involves exercise of professional judgment and the maintenance of professional skepticism. So finally, we include the description of the audit process. So in this part, we include the summary of the nature of audit procedures that we perform, the audit evidence that we obtain, and the detection of fraud and error. So we also mentioned that we perform study and evaluation of internal control, but not for the purpose of issuing opinion on those internal control, but to design the nature, time, and extent of our substantive test. Except, of course, if we are doing integrated audit. So meaning to say, as auditor, you are also expected to issue opinion on the internal control. Okay, but if you are not performing integrated audit, then we need to issue only on the financial statements. So not including on the effectiveness and effectiveness of internal controls of our client. So we also mentioned that we evaluate the appropriateness of accounting policies and reasonableness of accounting estimates and related disclosures made by management. So another is to conclude on the appropriateness of the going concern assumption made by management and to draw attention of the users. Now, if there is material uncertainty existing, so related to the operations of the entity, and we have to modify our opinion in case not those material uncertainty would not be adequately disclosed in their financial statements. So we also include evaluation of the overall presentation, structure, content of the financial statements, including disclosures, and whether the financial statements achieve fair presentation. So because remember, we are using fair presentation framework in auditing the financial statements of our clients. And finally, we also include our responsibility to obtain evidence about the components, direction, supervision, and performance of group audit, and as auditor to remain solely responsible for our audit opinion. So, but this part is only included if we are doing group audit. Now, this last bullet point here. So after the description of the audit process is still part of our auditor's responsibility section. So we include the communication with those charged with governance. So in this part, we include that we communicate to those charged with governance our planned scope and timing of the audit and significant findings, including significant deficiencies in internal control. We also provide a statement of compliance regarding independence and our process of identifying key audit matters. So this is an example of the auditor's responsibility section in the auditor's report. So this one. So auditor's responsibilities for the audit of the financial statements. So the matters that we have mentioned in the previous slides. Okay. So and then next is the description of the audit process. So this one. So description of audit process, the one we discussed earlier. So this one is also part of the description of the audit process. So this one is the communication with those charged with governance. Okay, so up to this part. So, but take note, those grade areas, we have the option to include them in an appendix or in a website. So instead of putting them in the audit report itself. So the description of our audit responsibilities in accordance with paragraph 38 to 39 of PSA 700. Now, these were the grade areas in our previous slides. So yung grade areas there, so we can include it within the auditor's report as is. or we can exclude it from our audit report altogether and include it in an appendix. We just have to refer where is the appendix when we issue our audit report, or we can also refer it to a website of an appropriate authority where law, regulation, or national auditing standards expressly permit the auditor to do so. Okay? So we can omit those portion in our audit report and refer them to an external source like the website of authorized government body, okay? Or authorized organization, like the AASC here in the Philippines. So the next section is the other reporting responsibility section. So if we have other reporting responsibilities like here in the Philippines, we have other reporting responsibilities with respect to the requirements of the BIR, then we have to address it in a separate section of our audit report. So this is how it will look like. So we have a report on other legal and regulatory requirements. So for example, in the Philippines, the BIR requires auditors to report on supplementary information provided by entities that we audit under Revenue Regulation 15-2010. So we shall see this later in our example. And the next, we have the name of the engagement partner. So the name of the engagement partner shall be included in our audit report of listed entities. So required to be disclosed the name of the engagement partner. So the exception is that in rare circumstances where disclosure is reasonably expected to lead to a significant personal security threat of the auditor. And then followed by signature of the auditor, next section. So the auditor's report shall be signed. In the Philippines, the BIR requires the auditor's report to be manually signed. However, in the recent year, for example, in 2020, so the BIR allowed electronic signature with respect to audit report because of the result of the pandemic. And then finally, the auditor's address. So the auditor's report shall name the location in the jurisdiction where we practices. Okay? So we have to include our address to determine the jurisdiction of our practice. And the final part, we have the date of the auditor's report. So this is very important. So the auditor's report shall be dated not earlier than the date on which the auditor has obtained sufficient and appropriate audit evidence. So this is also known as the last day of the field work. So meaning to say, this is the last date that we obtain evidence with respect to our audit procedures. So if there is a question, so when is the last day that we obtain evidence? So up to the date of the audit report. Okay. So here we have to include that all the statements that comprise the financial statements, including the related notes, have been prepared, and those within the recognized authority have asserted that they have taken the responsibility for the financial statements. So that is why, if you remember in our previous discussion, so usually this date coincides with the date of the management representation letter that we obtain from the management.